Hi, I am CA Pritish and welcome to a follow-up video on saving tax in case if you have sold house property. I had uploaded a video on saving tax or pay zero tax on sale of house property, and for which I have got more than 1 lakh views. Thank you very much for that, and also I've got many queries on that and 80% of them I have answered and some of them I could not answer. So that is why I am going to answer majority of the questions or the questions that have been repeated in that video in this particular question and answer session. So the most frequently asked question in the comment section in my previous video is that to compute the capital gains tax. So I need to apologize to those who have asked this question because I'll not be able to answer or compute the capital gain tax for everybody. That is the reason why I have given a complete and a simple example in that video which will help you to compute the capital gain tax yourself. The next question is, sir, it is necessary that the amount must be deposited in the capital gain account, or if a person will buy a new asset within 2 years, or it can also be deposited in a savings account. The answer to this question is that you cannot deposit it in a savings account. You need to open a capital gains account itself in case if you are not able to buy a house property, and then only you can withdraw the amount from capital gains account only, and then you can invest in the house property, and not FDs is not possible, savings bank account is not possible. A specific capital gain account should be opened and utilized for buying a new house property. The next question that has been asked is, does interest of home loan is also added in the cost of purchase, or it is just the amount mentioned in the purchase deed? The answer to this question is that the home loan interest is not added to this. Only the amount that you have purchased or that is mentioned in the purchase deed only will be considered as your cost of acquisition along with cost of improvements, but not the home loan interest is not added. The next question is, Ram received a house as a gift from his grandfather. If he sells the house, how will his capital gain be calculated? A very interesting question. So in case if you have received a gift from your grandfather, then in that case, the cost that the grandfather has paid will be your cost because you have not paid anything. Your grandfather has paid. So the cost of acquisition will be the amount that the grandfather has paid. And in this case, in case if the property has been gifted to you before 1/4/2000, then the stamp duty value as on 1/4/2000 will be considered as the cost of acquisition, and then you can add the indexation. The next question is, the property was bought in the year 1996, and what is the cost of acquisition in this case? So this is a frequently asked question. The cost of acquisition is very simple. The government valuation or the fair market value as on 1/4/2000 will be your cost of acquisition, and then you need to add the indexation. So the base year earlier was 1981, but now it is 1/4/2000. Next question. Dear sir, what if unknowingly capital gain amount invested in fixed deposit of a nationalized bank instead of said mentioned bond or capital gain scheme? So in this case, as I already said, you need to invest in a capital gain account scheme itself, or NHAI bonds or the mentioned bonds within a period of 6 months. So otherwise, the most important thing is that you will be liable to pay tax. Next interesting question is, sir, your video is very informative. My question is, shall I give the entire money arising out of selling residential property to my son to purchase a residential property? Now here there are two transactions. First is you are selling a house property, and the second is that you are gifting the amount that you have received from selling the house property to your son. The first transaction is different from the second transaction. In the case of first transaction, you need to discharge your capital gain tax liability without fail, because gifting it to your son does not make any difference to the first transaction. And in case of second transaction, the amount that your son has received from you will not be liable to tax in his hands because it is received from his father and it is gift from a relative. So as per the gift laws in India, it is completely exempt. Sir, I want to sell one of my plot which was purchased in 2007. I would like to construct 2 floors with that amount on my existing house. Can I claim LTCG tax? Yes, that is possible. You can construct an additional 2 floors as well and claim the long-term capital gain tax exemption. No problem with that. What about capital gain tax for non-residents? In case of non-residents as well, there is no difference at all. You need to discharge your capital gain tax liability just like the residents. The next interesting question is, I have purchased an apartment for 65 lakh. My father sold his house for 35 lakhs and I used that money to prepay my home loan. Is that amount still taxable? Here the first thing is that you have bought a house and your father has sold a house for 35 lakhs. Here you need to compute whether there is capital gain tax needs to be paid by your father. In that case it has to be done and there is no other option. And the next thing that you have done is you have used the sale proceeds from your father to prepay your home loan which you have bought for 65 lakhs. Yes, there is no connection to this. The amount that your father has received, compute the capital gain tax, and if there is capital gain tax liability, then you need to discharge or apply any exemption provisions as per the income tax. The next question is, my father bought a house around 40 to 50 years back and now is willing to sell it. So we are looking for two options. First one is to reinvest the capital gain amount to buy commercial property to save capital gain tax. Is it possible? So in this case, the answer to the first question is that you cannot reinvest in commercial property in case if you have sold a residential house property. There is a separate video that I have made on how to save tax in case of commercial house property. But in this case, you need to follow the exemptions that I have given in the video. And the second question is there any way by which he can gift me the sale proceeds and not pay capital gain tax? Please help me with this. The answer to this question, which I've already answered previously, is that you need to pay capital gain tax in case of the first transaction, and the second transaction is the gift transaction. You will not be liable to pay tax on the gift that you receive from your father, but your father has to discharge the capital gain tax liability while selling his property. Hi sir, we have sold residential property in Bangalore for 1 crore 18 lakhs which was purchased in 1992 for 70,000. We have put 50 lakhs in capital gain and 35 lakhs in NHAI bonds. Is there any possibility to avoid tax? When we consulted a CA, he said we'll have to pay tax of rupees 7 lakhs. What is the calculation and is there a possibility to do indexation? So here the first point is that I will not be able to do the exact calculation because you need to find out the value as on 1/4/2000 because you had bought the property for 70,000 in the year 1992. Here the base year is 1/4/2000. And the second point here that you have to note is that you have already put 50 lakhs in capital gain scheme which you need to utilize it for buying a new house property, and 35 lakhs in NHAI bonds which will be matured after a period of 5 years. Interest will be taxable on a yearly basis. When you get the amount back, there is no problem of taxation. And in addition to this, is there a possibility to do indexation? Definitely arrive at the cost as on 1/4/2000. If there are any improvements, definitely you can add, and then you can add the indexation benefit as well. If we do not want to purchase a new property, then how to claim TDS? Shall we file return or leave it? And this is a very important question. That you need to file your income tax return as you sell any capital asset, whether it is shares, bonds, or house property or commercial property. It is very important that you need to file your income tax return. And when filing the income tax return, if there is any TDS, definitely in case if you are eligible to get any refund, then definitely you can claim the refund. But ensure that you file your income tax return because the data is captured through the sub registrar's office and the income tax department has all the data that you have sold the house property. So be very careful, and it is important that you file your income tax return. Next question is how much maximum amount that I can invest in NHAI bonds or capital gain bonds. The maximum amount that you can invest is only rupees 50 lakhs and not beyond that. The next question is, hi sir, to save IT under 54 EC, should I have to invest in bond only the profit amount that I earned from sale of land or the whole amount I received in case of sale of land? So here you need to invest only the profit amount, the capital gain amount that you need to invest, and not the entire amount. The next question is quite informative. Can you please explain the procedure for selling a household property flat in India of my son and his wife who are now citizens of another country, USA? Can they repatriate the fund? First thing is that they are non-residents, and the second thing is that you need to compute the capital gain tax, and definitely you can repatriate the funds after discharging your capital gain tax liability. In this case, while repatriating the funds, you need to have a form called 15CA, or a certificate rather called 15CA 15CB from a chartered accountant, and then you need to submit with your banker, and then you can repatriate the funds. This is a certificate certifying that you have discharged the capital gain tax liability and there is no tax liability at all. So friends, thank you very much for watching this video, and in this video I have answered only the most frequently asked questions, whereas there are some other interesting questions also. And in case if you have any more questions, please feel free to put your comments below, and I will club the questions and answer in a separate video. Thank you very much, and in case if you have not subscribed, like my channel, please do it so that you will follow my videos on taxation, finance and investing. Thank you very much.